Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is December 10th, 2018, and today is Monday morning. So we're looking at the back of last Friday's NFP report. Now, this morning, we have one GDP number coming out of United Kingdom. Not a big number because it's a monthly number, so we're not going to bring it up. But as a market wrap up to last week, we're looking at the Forex symbols. It was a mixed bag for the euro. Euro was very strong, but the Australian dollar got much weaker versus the dollar. We're going to take a look at that. In terms of the indices, DAX broke 11,000 last week. We're going to take a look, and Dow is right now sitting heavy on support. And it might look like it's going to actually break on the downside. Now, looking at commodities, and when the Dow goes down, what happens to the gold? The gold continues to go up, and it broke out on the upside last week. And we're going to take a look at that. And lastly, in terms of the cryptos, they keep on breaking lower. Okay, the riskier kind of investments always break down faster than everything else. So we're really in a very bear market right now. Now let's take a look at what we can expect from today's trading. So looking here at the Euro USD, we're at the top of the range of 14.37. It looked like it was going to break down last week, possibly, but we said that it was going to trade within the range. Now, what I don't like about this is that the Aussie dollar is going one way, the euro is going another way. The euro is getting stronger on the upside. It may actually reverse here. But if we look at the Aussie dollar, okay, on its support level on a 4-hour chart, let's take a look at that on the bottom of the range, whereas I would have expected it to be on the top of the range, especially since the Aussie dollar was usually the stronger pair versus the USD. However, that's not the case, as you can see here. So, it's kind of like a mixed bag right now as to what we can expect from today's trading. Now, looking at the GBP USD, just to mix things up even more, is that we're also sitting close to support. Every time we hit 127, we bounce off of it. Okay, so, right now we're just above our 30-day moving average and in between our 14-day moving average. So really nothing to write home about. Nothing's jumping at me on this Monday morning, in terms of the Forex symbols. However, looking at gold, okay, gold pushed itself up above 1240 last week to 1249. We hit just above 1250. Now, this is a major correction for gold. Okay, we back in the summertime, we mentioned that it might even hit 1150. It came close to it, okay, and then bounced right off of it. So right now we're trading at 1249. I do expect some sort of a sell-off here, okay, as we've broken above the support level. Next real resistance level is 1270. So this is a bona fide start to a upwards trend, okay. However, now looking at the Dow Jones, look at this. I mean, this is so indicative of a bear market. I mean, this is after we hit our highs in October. We sold off sharply to this 24,300-ish level. We bounced off of it the first time. Okay, we sold off from 26 back down to 24,200-ish level. And then, it's a zigzag area. And we find ourselves right there again at this level. So this is actually pretty decent for it to actually bounce off of the support. So that's what I would look for that today. As you can see, it has like a small green candle right now. So that's actually the play I would actually look to do. Now, I wouldn't get heavy in it necessarily, but I would look to actually, play the bounce as it does, enter the end of the season. Now, not to say that we may not break 24,000 as we move further into 2009, but looking at it right now, it may actually bounce off of these levels. So I'm going to have to, really keep a sharp eye on this to see what's going on. Now, looking at the stocks on the back of this, everything's really weak. We're trading at 167 on Apple, back down to its lows. Really a very sharp sell-off there below this 170-ish level where we held ourselves last week. Facebook is back to this 136-ish level, not back to the 128-ish level, but it's everything is just playing catch up. First it's Apple to go down, then it's Facebook, then it's Amazon, then it's Google, and they're all catching up to these lower levels, as the market is selling off. However, again, I can't stress this enough. We're entering the latter part of the month, and I do feel that we'll still get a, end of the year rally. Lastly, let's look at Bitcoin trading below 3,500. Okay, we broke that 4,000 level a couple of weeks ago, and then we're not really seeing the light of day. Now, to just appreciate this further, how much further this can go down, it could go to the 900-ish level. Okay, if the general market continues to sell off, we could definitely see ourselves back at this 900-ish level. That's really the next real support level that I would, consider actually, jumping into it, for an anticipation that I'll have some sort of recovery in the next 5 years. So, really, you got to keep that in perspective, and, to understand that this is really still in its infant stages, even though it, went up to 14 to 20,000 last year. This is Fred Razak. I want to wish you guys a great trading day. Thank you.